Getting the important news without drowning in details, that's the goal, right? You want it clear, quick.
Exactly. And that's what we're aiming for today.
We've looked at some recent financial news, and the mission really is just to figure out the main economic shifts highlighted there and, what they might actually mean.
To understand the potential ripples. Okay, where do we start?
Let's kick off with South Korea. The briefing mentioned their GDP growth.
Yes. It slowed. Quite noticeably, actually. Down to 0.3% growth in the first quarter of this year.
Which was what? Down from 0.6% the quarter before?
That's right. So basically halved quarter on quarter.
And GDP, just quickly, that's gross domestic product. It's essentially the value of, everything a country produces and sells.
Pretty much the standard measure of economic output. So a slowdown like this means the economy isn't growing as fast.
Any reasons given for that slowdown?
The briefing points to two main things. Exports weren't as strong, and consumer spending the word they used was sluggish.
Sluggish meaning slow. People not buying as much.
Yeah, consumers maybe being a bit more cautious. And exports, that's the stuff South Korea sells to other countries.
So less demand overseas and people tightening their belts at home. Does this tell us anything broader?
Well, it could. South Korea is a major player, especially in tech and manufacturing. If their exports are weak, it might hint at, say, weaker global demand for certain goods. It's something to keep an eye on.
Okay, interesting. A potential signal there. Let's shift over to the U.S., the stock market.
Right. The briefing mentioned a slight dip in the U.S. market on Wednesday. Not a huge crash, just, a downward move.
And what was behind that?
It seems to be linked to earnings reports from some of the big tech companies. Microsoft and Google were named.
Earnings meaning their profits, basically, how much money they made.
Exactly. And the reports were apparently a bit mixed. Some good, some maybe not meeting expectations.
So it wasn't all sunshine and rainbows from big tech?
Apparently not. And that seems to have made some investors a little nervous. There's a bit of concern, maybe, that the really strong growth we've seen in tech might be slowing down this year.
Right. Investors being the folks putting money into companies, hoping to make more money back, so they're maybe getting a bit cautious about tech.
That seems to be the interpretation. Is it just a blip or sentiment shifting? That's the question it raises.
And for someone listening, why track this dip in the U.S. market?
Well, the U.S. economy, and especially its tech sector, are huge influences globally. What happens there can ripple out, affecting investments, pension funds, you name it, all over the world.
Okay, got it. Now, another thing that caught my eye in the briefing was oil prices. They went up.
Yes, they did. The reason cited was rising tensions in the Middle East.
Geopolitics affecting prices again.
It often does, especially with oil. When there's more tension or instability in a major oil-producing region like the Middle East, investors worry.
They worry about the supply, right? That the flow of oil might get disrupted.
Precisely. That concern about potential disruption to the oil supply, how much oil is actually available, tends to push prices up. It's a fear premium almost.
Tension meaning, situations where conflict might break out, and a price rise is just, it costs more.
Simple as that.
Yeah.
But it shows how quickly world events can hit commodity markets.
And higher oil prices, we all feel that eventually, don't we?
Absolutely. Gas at the pump is the obvious one, but it filters through into the cost of transporting goods, manufacturing, heating. It can definitely add to inflation pressures.
Right. Okay, one last key point from the briefing. Back to South Korea, but this time the housing market.
Yes, it mentioned that the housing market there is still pretty cool. Prices are described as flat or even falling, especially around Seoul.
So the opposite of what many places saw a couple of years ago. What's keeping things cool?
Two main factors highlighted. High interest rates, meaning it costs more to borrow money for a mortgage, and general economic uncertainty.
Uncertainty just meaning people aren't sure what's going to happen next with the economy.
Exactly. And when borrowing is expensive and the future feels a bit shaky, potential home buyers tend to stay on the sidelines. They hold off.
Makes sense. People wait and see. What does a cool housing market mean for the wider economy there?
Well, it can be a drag. Construction slows down, real estate activity cools, and it can also affect how wealthy people feel, which might impact their spending on other things too. It's quite interconnected.
Okay, so let's just quickly recap those 4 points from the April 24th briefing.
Sure. We had South Korea's GDP growth slowing down, mainly due to weaker exports and consumer spending.
Then that slight dip in the U.S. stock market after some mixed results from the big tech companies.
Followed by oil prices climbing because of increased tensions in the Middle East and supply worries.
And finally, the housing market in South Korea staying cool, held back by high interest rates and economic uncertainty.
Yeah, quite a snapshot of different forces at play.
And you can really see how these things might connect global demand affecting exports, tech sentiment shifting, geopolitical events hitting energy costs, interest rates impacting housing.
It's all part of that complex global economic web.
Definitely. So maybe something for you to think about is how these different pieces, slowing growth in Asia, tech jitters in the US, energy costs, housing markets, how they might all fit together and maybe influence the broader economic picture we see unfolding.
Yeah, how did these separate threads weave together? It's certainly some food for thought.